Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me at the desk at the Nasdaq market site, we have Cecil, founder and president of Biltmore Family Office and Family Office in Charlotte, chair with Tiger 21. We have Gavin Whyte, founder of BrewAI, as well as joining us remotely, Gerry Fox, founder of Gerard Law. We're here to discuss risk management, compliance, and governance structures of family offices. Gentlemen, it's great to have all of you with us. Welcome to Trade Talks. And let's go around the table here and learn more about your role. Chris, we'll start with you within the family office space.
Thank you, Jill. Good afternoon. Well, I'm the president and CEO of Biltmore Family Office, and it's really a venue where we've taken 6 to 7 generations of knowledge around a family office and applied it to something more modern, more proactive. And we really use a family office balance sheet framework to where we help entrepreneurs and business sellers who are familiar with a balance sheet structure of really how do they use this structure to assess what they're doing with investing, with planning, and most importantly with governance and risk management. And it's a framework that they understand.
Yeah, and it's interesting, and we'll get into the many roles of risk management throughout the family office organization. But Gavin, BrewAI, you're bringing in the technical side with the family office experience.
Yes, Jill, and thank you. So we focus around private generative AI models to focus around the compliance, governance of data, and how family office data is kept safe, provided accurate information from the generative AI itself, and more importantly, how does it analyze the numbers that we find through the portfolios in the company itself? Yeah,
and Gerry, you're bringing in the legal perspective as it relates to the family office space.
Yes, I started a big law. Now I have Gerard Fox Law in Los Angeles, and about 3 decades ago, I had litigated. I'm a top trial lawyer. I litigated a case having to do with Marvin Davis, and was probably one of the first of its kind family office situations. And that case disclosed many legal issues that you see in these family office setups that are ignored, that caused a tremendous amount of litigation that was costly and liability. So I now regularly help family offices make sure that they're following the law and make sure that they're running efficiently under the law. And I will often meet with them and review their operations to assist.
Yeah, and Gerry, what's interesting, having 3 guests here, one is talking about the investment side of structure, tech side, and then we have the legal side of structuring for family offices. And you had mentioned the importance is you want to make sure that you're avoiding tax penalties and liabilities. How should family offices be thinking about this to address those critical gaps?
Well, the first issue that a family office typically has is that you have trust agreements. When an individual becomes wealthy, they set up trusts. And those lawyers that are trust lawyers limit the manner in which you can use the trust money. But I will tell you 9 times out of 10, once the family office starts moving, it takes a beneficiary down the line years to figure out that they were not abiding by the trust documents. So the very first thing is you must know your trust documents, you must abide by them or amend them. Second, there are conflicts of interest. If you're running a family office and somebody wants a registered investment advisor to start, trading for them, you cannot just send them to your golf buddy or the person handling your money. You have to do your due diligence. You have to find people who are the best at it and give them a couple of options. And finally, many of these family offices are large and they don't have any compliance whatsoever. And compliance is very important because that involves due diligence of each investment and making sure that your protocols are being followed. So I work with family offices to set up a compliance group. I make sure that they're adhering with the trust documents. I also make sure that they understand that they cannot favor one beneficiary over another, or allow the person who started the trust to basically use the trust money as their own now, because it's no longer, you can't use it as collateral for a deal unless the trust agreement says so.
Yeah, it's interesting, Chris, you would think it's almost counterintuitive to not guide your clients or the family through this process. You brought up an interesting point off camera before. Sometimes they might not even know some of the generations that these massive assets get passed down to.
Yeah. Well, Gerry brings up a great point that the technical side of drafting and organizing the complex structure that family offices have has to be point on and perfect. We find later on two things happen. That's done, and often it's put aside and it's left on the shelf for years to come. And it's created a lot of entities and a lot of structures that each need a lot of care and feeding over the years. So sometimes that gets missed. But more importantly is the communication and the education around the intentions of all of these structures that have been created for the next succession generation and heirs, because the lack of communicating the intentions really leads to a family office that has lacks accountability, lacks responsibility, and more importantly, lacks a structure to deal with conflict. And conflict around structures will happen. So this all has to be built through an education plan and communicated. And it seems to be one of the biggest risks that family offices have. Above and beyond investment-related risk or liability risk.
Right, especially since the investments that they are looking for are more complex than what you would think of as a traditional 60-40 stock bond portfolio. The other part of this, Gavin bringing the tech into it from a risk management perspective, now we're seeing family offices rely on emerging AI tools to complete this package when it comes to data security, intellectual property. How is this aiding the family office space?
So Jill, that's an interesting question, because if you look today, how do we review compliance and governance? It's a very manual, tedious process. You have someone appointed in the firm, they do a review, they produce a report, that gets passed on, the way you're investing changes, et cetera, et cetera. The question is, how do we ingest all of this data and how do we overlay this utilizing AI to actually speed up that process and guide investors and family members to actually understand how they have crafted their investments? Now, we can do this today very effectively through AI, and specifically generative AI, where we could summarize a trust document, bringing out the key features of how you could invest, or ask questions directly to these documents and get immediate answers. This will allow the investors or allow the beneficiaries to actually understand the frameworks in which they can invest in. And this needs to be live, updated, with all the various types of investments that are implemented in it.
Yeah.
So you could do that quite effectively in near real time these days with private generative AI models.
Yeah, and Gerry, I would think, when you're considering preventing financial losses through professional oversight and being able to employ these emerging technologies, you point out in your notes, if you have one kink in the supply chain, that could be really costly for family offices. It's a domino effect, and again, these are complex structures. It's not as simple as plugging and playing ETFs into a portfolio.
Well, yes, and besides, family offices now, as you said, invest in alternative investments. I had one family office that decided that it wanted to do oil deals, which are very complex, and if you're not careful, you could be involved in money laundering without knowing it. And the more you step away from the traditional investments, the more you need people who know how to do research, and who are we dealing with? What's their background? How'd they get their money? So it's very, very important, because the amount of litigation that can go on, either because a beneficiary wakes up and realizes that you're not investing within the parameters of the trust, or you invest in an investment that draws the SEC into the picture, or is a bad investment where you've been defrauded, and now what are you going to do to recover it? So it's very, very important that you use as much a modern technology, and know that you have to do your due diligence, your compliance, and comport the trust documents.
Right, and at the end of the day, I'm sorry, we'll get to that in 1 second, but Gerry, at the end of the day, as these products and the structure get more complex, fiduciary liability and responsibility doesn't go away. You have to evolve that role with the structure.
Anyone who is handling the money of another is a fiduciary, which means that if they cannot just, they're not going to just sue you for breach of fiduciary duty. I have one family office, and they were lax on tax returns. There were huge penalties. Well, they were so lax that they got hit with punitive damages. So, I try to, I think a lot of people feel like I'm in the family office and I'm a former investment advisor, or I'm a CPA, and and they forget all the rules that would apply if they were at an investment banking house or at a CPA firm. And the liability is dramatic now.
Yeah, I would imagine
Dramatic.
it certainly is, especially, we're a bit litigious here in the U.S. as it is. I have a feeling you were going somewhere along that route as well, Chris.
Well, I'm just excited to hear that this technology is here. We spend an inordinate amount of time looking at deals and opportunities. As a collaborative family office, maybe 50% of the investments we've made over the last decade have been sourced by client families. But it's led us into container shipping, music royalties, oil, nuclear. But AI would be enormous help and benefit to start looking at all of the subscription documents, the due diligence documents, and being able to compare them to documents that we've known and trusted and used over the years. So also our due diligence platform really looks at outliers. So when we interview investment managers in the preliminary stages or through the investment stage, we're consistently talking to their staff, other members of their staff, same questions, but to bring this data together and use AI as a method to look for outliers or where the story has changed, and that creates the red flags in due diligence for us.
Yeah, well, it's interesting, Gavin, when we first started covering AI as it became part of the consumer vernacular in November 2022, we attacked it from the ethical and responsible use of AI, hallucinations being one of them. And I remember asking tax and legal, even healthcare practitioners, how can this, how will that impact how things are summarized or structured, or if you're citing the right cases or citing the right technology? Are hallucinations going to be a thing of the past, or is it improving from that perspective?
So Jill, that is probably the most valuable question out there today with generative AI, and the tech is improving. At BrewAI, just last year, we released a paper globally showing how we can reduce hallucinations close to the upper 90s, almost eliminate it. And we've embedded that tech. We've released a global mathematical paper on it. So that technology today now does exist. And it all comes down to where your data is stored, how you're utilizing that data, and can you cross-reference the data after it's summarized it. So what we've done very securely for a lot of legal firms today is when we do summarize a document, you actually can click on a link and it shows you where it extracted the information directly from the original source documents. Now, that level of audit trail is going to be, the norm going forward in order to summarize documents.
Yeah, which is interesting, Gerry. Let's bring the legal perspective into that, because if you do run a scenario through a generative AI or another AI type of platform, let's say, for example, it comes back and it's citing the wrong case, right? That can certainly be an issue when you're in the middle of litigating. How is the legal profession looking at this as fiduciary responsibilities continue to evolve?
Well, technology is very, very important, and you always have to try to make sure that you have technology that is adapted for your use, and always check it. Have a audit process on it so that you're not making mistakes. But for example, I have a family office that invested in IP funds. And they wanted to send them to a bank that would receive them and transfer them into cash. They're a European family office. The way that everybody does now, banks are very hesitant because there's a lot of people in the world and a lot of companies that launder money. So the first thing you do is you get their passport and their CIS, and you start doing background research on them and their companies, how they made their money, so that you can be assured that you're not moving dirty money. Because the more you drift away from a traditional investment, you have got to be looking at these issues. Now, if you use AI, you can find out, are they on any kind of FBI or other counterintelligence watch list? Are they clean? Do they have a good record? You can go much deeper, much quicker. And so I think it's a very important and useful tool because when you're, with stocks and bonds, it's already difficult enough. Is that consistent with the trust? Often they're not. I had a trust that was for education and health, and they invested in Puerto Rican bonds.
Oh,
Those are high risk.
yeah.
So, even if you're in the stocks and bonds area, you can make drastic mistakes, but every step out further, we're going to invest in this company. We're going to buy this music catalog. We're going to do this gold deal. We're going to do this oil deal. We want to, take IP money and change it from one platform to another, or Bitcoin, or whatever the issue is. The amount of research, which is just what it is, research into who am I dealing with? How did they make their money? What is their background? Are they a clean business, clean person? And that can take hours and hours if you do it the old-fashioned way, but with AI, it can move extremely quickly.
Yeah, I could even take that to the next derivative, because being SEC registered, and this is a big concern with the Tiger 21 family office group that I run, we discuss it all the time, is about once our data is shared with a third party, accountant, other investors, third party investment fund, custodian, okay, where are they taking our data? And traditionally, you'd review their SOC reports, you'd review due diligence on their firm and make sure they've got security protocols. But as our third parties are using third-party AI, okay, you really don't know how far your sensitive data goes. And that's a big fear of a lot of these families.
Yeah, it certainly is. And actually, it's a great point. Gavin, I'm going to wrap this up with you. Okay. Bad actors, good actors are leveraging the same type of technology. Data governance is getting more complex. However, the technologies that you're leveraging at BrewAI as an example, perhaps the predictive technologies can see these vulnerabilities. It can mitigate. And by the way, if there is an incident, your response time and those strategies have also been improved by these technologies.
Yeah, no, absolutely, Jill. It's the way we analyze the data, number one, is critical. And we can do it in a number of ways, through predictive analytics, through generative AI, matching documents, and as Gerry has alluded to, third-party data sources. We can pull all of this information and do it in a very secure, safe environment, possibly on your client's site or in a private cloud, where you can process the information with a complete audit trail, detect the anomalies using these algorithms and methodologies, and then obviously report in near real time. So all of this can be done in milliseconds these days. You can pull information out, you can analyze it, whether you're analyzing a balance sheet, looking for fraudulent items, all the way to understanding a background of an individual. But it all needs to be processed in a very secure platform. And with these open models today, any amount of data can leak. But in private generative AI models, you keep your data safe, you have your reduction of hallucinations, which is going to make a significant impact, and you have an entire audit trail of how it's derived. All
right, appreciate everyone's insight. It's great to see how this industry continues to evolve. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.